Hi, Daniel Major here, CEO of GoviEx Uranium, Africa-focused developer. 3 projects, 2 of them are mine permitted. Madaouela project in Niger, or feasibility study already done, currently working on the financing. Mutanga project in Zambia, finishing off its FS by this time next year. And then we have the Falea project, which is currently under transaction with Africa Energy, where we've agreed a disposal because they can focus on it more than we can, given the high quality of our other projects. We want to focus there.
Busy old year in 2022. Not that anyone got credit for it.
It was a very busy year. I was actually knackered by the end of it. No, it was. I mean, we put a shareholder note out at the beginning of the end of this last month, and it kind of went through actually what we'd achieved during the year. So full feasibility study completed for Madaouela, and a lot of improvements on that. You know, we had to take some hit on some of the inflation, but actually we priced it pretty well at the peak of inflation. So I'm expecting...
That's kind of good news. I'm going to take it. That's good news.
Yeah, so I think some of these things we'll see coming back down again, already going through. We did the initial teaser for the lenders on who wants to be in the debt pool to start with and go in the data room. You know, unconventional commodity, unconventional jurisdiction. We still got at least 20 participants who are now in that data room. On Mutanga, did all of the infill drilling for the Dibwe East deposit. Actually, you know, we'll wait to see what the results actually look like, but certainly, you know, my gut feel it was, and the feedback I'm getting, it was very positive. So with that, and then right at the end, we kind of restructured what we were doing with Falea. We just, given what our other 2 projects are looking for, cash flow, etc., we kind of felt somebody else really needs to take this project on to drive it forward. It's a great project, but it was always my 3rd project.
Absolutely. Look, I think strategically, I think that's a smart move, quite frankly. Otherwise, you never get around to it, and you weren't getting any value for it otherwise. So exactly. that makes total sense. When are you looking to have that closed?
By mid-March.
Okay.
So it's not long.
What's that do for the coffers?
We're getting mainly shares. We're getting $500,000 of cash, Canadian, and we get 2 million of their shares on the first tranche. There's another 3 million on the second tranche that comes through when one of the licenses need to be recovered. Well, it reaches the end of its life. So they're committed to getting it back. And then we get a 3% NSR.
And do you need to monetize that? I said, do you need the cash?
We will not to start with. We'll let them carry on for a while and see where they go to. So we still keep the leverage in there. Right. You know, we'll actually be a 20% shareholder of the company. So, you know, it's fine. But what it does do as well, it removes the requirement for us to budget.
Okay. And it gives them a chance to breathe and maybe create some value for you guys when you monetize the future. Okay, so that's all good. I want to talk to you, first of all, about the market, and then we'll come down to asset level if you don't mind, right? I think there's been, and I thank the Lord, because it's a long time coming, the debate between high grade versus low grade, North America versus Africa, seems to have gone away. I think there's people have come around to, North American investors have come around to understanding what the African uranium companies are going to be able to do in terms of actual supply into market. There's a bit of a reality check has gone on there, hasn't there?
I think more importantly, I'll come back to that, is the utilities care.
Right.
That's where it really matters. Right. Is the utilities are looking at Africa and going, we need diversification of supply. These projects are ready now. We need to support them and get them on board. You know, and that is a key. You know, they're not just saying, oh, we're going to stay in these jurisdictions. It's like, no. Absolutely right. I think you've seen a lot of news coming out of myself and my peers. You know, we've always said, guys, mining permits are key. That when the cycle turns, it's the guys who can get going are the ones who are going to make the major play right at the beginning. And it's great having a lovely project in the Athabasca, but if you've got another 6 to 10 years before you're going to do it, does it matter? You know, and you know, one of my debates with analysts is always, but you always MPV them from today. Why do you never MPV them from today to when they're actually going to start? You know, and that's an issue that I don't, you know, we'll come back to it when we come to Madaouela.
Well, it's an issue with growth because they've got to backfill that valuation that they've been attributed, which is tough in terms of investors. You make money when your share price goes up. It's a difficult environment if you're sitting around waiting, you're burning through cash and waiting for a license, right? Right. So that I totally get that. But I would also say to people watching this, we need all of the above. It's not them versus us. It's what we're talking about today is timing.
Correct.
Okay. African plays seem to be timing this better. They're also, in terms of pounds coming out of the ground, significantly bigger than I think most people realized.
Absolutely. And I mean, one of the things I've been stressing to investors is that we have long life projects, and we have 2 of them. And there are a lot of projects out there who have lives sub 10 years. Right. Now, if you're going to a utility and looking for long-term contracts, you kind of want something more than 6. It's very difficult to get a long-term contract. Yeah. But the other thing it will cause you a problem with is if you're looking for a debt tenor, because the debt guys also want a resource tail. Yep. If you've only got 6 years, you're going to have to pay everything back in 3. Yeah. So, having long life projects is also key. And we had this conversation before, I think, you even compare our 2 projects. One's got a grade almost 4 or 5 times higher than the other project, yet the lower grade project actually has the better rate of return and the better NPV.
It's about margin. It's about making money, guys. Yes. And gals, because grade is one of the factors which determine the economics, just one. So the high grade, low grade conversation is really, for people in the industry, it's irrelevant here. Okay, yeah. So and I'm glad you brought that up, because it's been sort of muddying the waters, shall we say? Right. So it's evident from, there's a bunch of you. There's Global, yourselves, Deep Yellow. You've got Bannerman, all putting out these DFSs now. People can see that these low grade projects actually make money. That's good for Africa, but it's good also for people, investors, to understand the makeup of the uranium space that we're playing in now.
Absolutely. I mean, let's put it in practical terms. You look at, Cigar Lake. You freeze the rock, you drill down and raise bore, you take out this circular piece that you've got. Yeah. You then refill it all back up with cement again, and this is all done at hundreds of meters below the surface. Yeah. And then you go to Mutanga, where you literally dive straight into it. It's fairly friable rock, and we're using less than 9 kilograms a ton of acid to suck all the uranium out of it. Yep. A completely simple process versus a highly complex one at great depth with a lot of complexity that can go wrong and cost you to develop.
Right. All these things are fairly homogenous. It's an engineer's dream. It's consistent. Yeah. It's a processing, moving earth exercise. So they're all great. They all have their own technical challenges. They have their own economic challenges, and we need all the uranium. I keep saying that because I think people did this a bit tribal in uranium up until now. It has been.
Yes. I think people also understand the jurisdictions they're in, and you have that issue as well, that people are comfortable with the jurisdiction. They appreciate it, and it's more difficult to be comfortable with the jurisdiction that you don't know. Right. But I think we are showing as a group in Africa that these projects go forward, and I think you're also seeing it geopolitically when the US government comes out and says Africa is where we're going to get our critical metals from. Yeah. And is now throwing considerable amounts of money towards Africa in order to secure. So that political acceptance of where Africa is and what it means to all commodities is becoming much clearer now to the global community.
Well, it is, because we've had energy crises all around the world because of the Russia-Ukraine situation, and it's come to, top of the agenda, quite frankly. We've got the energy security is, I think, number one priority for us in Europe, definitely. We saw the high prices.
It's got to be.
The energy prices were insane last year. We've had blackouts even here.
Well, they're threatening them in the UK all the time.
Absolute shocker. But okay, hopefully that's getting sorted. Can I talk about what kind of conversations you're having? Because obviously African project, we're in Africa, African investors are here. What are they asking you in terms of getting that comfort around your ability to deliver?
Which you?
Well, you as
the utilities, the lenders, there's
a lot. There's obviously utility conversations I'm intrigued by, because they give you the term contracts to tell you you get funding. There's the regular investors looking at your share price and thinking, is this still a growth story? Yeah. You've got others looking to apply big capital, because they want to know, can you move the DFS and actually get it into production? Because there's a big gap
let's break those up into different components. The off-takers, definitely want to make sure, if they're going to make a commitment to us, that we can achieve what we're doing. They want diversification of supply. They're not uncomfortable with Africa, whether it's Namibia, Niger, or even Zambia. material has come through or from those jurisdictions in the past. So that's key. One of the key things for us as well with utilities is we've been educating, talking to the utilities all the way along about our projects, explaining what our projects are, because, you know, at the end of the day, they're taking a risk if they bet on supply. So explaining, you know, how our management style works, what we're doing. On quite a few of them as well, we have to deal with ESG because they have ESG requirements. They will not buy from you unless you can meet ESG commitments as well. So it's a big part of what we have to do as well. If you're looking at the lenders, obviously, you know, firstly, they start with the cash flow. I mean, you know, you've dealt with these guys before. It's all about the cash flow. And now we're moving into that, okay, let's get into the technical review side. Niger, they've all had to get comfortable with. But I think Niger, you know, I've been saying this for years, you know, it's been producing uranium since 1971. It's never missed a shipment. Yes, there are border issues for Niger, but there are no issues within Niger at all. You know, we can get skilled labor, we get power, we get water. I've got a government that supports developing mines. So, you know, from the lender's point of view, you know, we obviously have to think also about strategic investment into what we're doing as well. So we're kind of scanning the field for that as well now and saying, all right, well, when we come to the equity piece, how do we make up that equity piece? You know, we don't want to take a view yet, but we have to understand what the options are that we've got out there. And on the equity side, yeah, we're trading at a massive discount still, and you know, it frustrates me because, you know, like you said,
okay, well, break that down. Why do you say that?
Because let me give you an example. So we're sitting out there at the moment trading at less than 50 cents in the pound. I've got two large long life projects that both can get away at $65 or less on the uranium price. Mutanga we use 58 for, and it's got a 25% RR. There is, you know, another project sitting out there that's got a mine with a short life asset who trades at $4 a pound in the ground, and he's a higher price than we do. So it's like, you know, this doesn't make any sense from where we are. I mean, if you look at from, you know, Madaouela pulls out and over $83 million a year EBITDA flat. Yeah. Well, you know, companies trade at 6 to 8 times EBITDA. You know, let's go on the top end that 8 times EBITDA, 640 million. Even if you take the capex off for it, that still values Madaouela at well over $300 million if it was an operating company, and that's taking the capital out to get it. And you still get Mutanga for free. So our valuation does not make sense for it. And I think considering we have very solidly shown management performance, our ability to turn these projects to where we've never failed to deliver what we said we would do. That's always come through. Yet, you know, disconcerting not to see that valuation gap per pound close.
Okay. Have you met the new US ambassador for Niger yet?
No, but I've met the British one.
Okay.
Yes. And the new Canadian one.
So things are happening in Niger, is my point.
Oh, absolutely. I mean, you're seeing UKEF aggressively pushing, you know, wanting to finance around that part of the world. The US as well. Canada's always been very supportive into that part of the world.
Yeah. No, I'm interested because I think some conversations we've had, the sense is that the Americans will be investing more into Niger, not just on uranium, obviously, but there's another kind of mining diaspora forming.
Well, that's what I said. Really, you know, the US have realized that they let the ball drop on Africa in general, completely, and therefore Russian influence, China influence is grabbing. And if you want to grow your critical resources, the one completely unexploited or underexploited jurisdiction is Africa. And so, you know, was it 6 months ago, the US government came out and said, you know, these are the countries we are definitely supporting.
Essentially, and the dollar is very, very important there. Okay, in a way, the US can control some of these countries because of the US dollar and the importance of the US dollar. Okay, and so there's a kind of there's a whole economic discussion we can have around that. But my point is, I'm interested in how. Are there any kind of roadblocks for you for 2023? You've told us what we've done in 2022. There's some more stuff that you've got to do in 2023. You capitalize for that.
We raised 10 Canadian at the end of last year.
Yeah.
Well, obviously, given if I go to an EPCM, then I'm obviously going to need a lot more money.
Yeah.
But that will be because we're moving towards the front, and I've got an FS to run as well, and they're quite expensive. So we will have to raise some money at some point going forward.
Right. Okay. Yeah. Because you can kind of rip through that, obviously advancing the project. But the point is, it's an encouraging environment to be advancing the project forward.
Well, absolutely. And, when you look what we now have in front of us to do this year, what my key reason for coming down here was to meet with potential lenders who lend into African projects.
Yeah.
And these are the guys who are already in our data room. So that process is fully underway. We're looking for their indicative terms, letters of interest in the next month or so, once they've had their first pass on the data room. And when we got that, the independent engineers will go to work. The independent environmental engineers will go to work to completely dissect our project to give them the comfort level. And, we've discussed this before. My approach is very much, get the debt guys ahead of the game, and then gradually we'll bring the offtake guys in.
Yeah.
And my approach with the offtakers is we will only aggressively negotiate with you when we can show you there's a path to financing. There's no point in me, rushing out trying to cut pounds and cut a deal and saying, oh, here we go, I've got a press release that says I'm going to get these pounds.
Yeah.
I want those all to come together with the debt at the same time, then we get the equity.
See, I think it's a very interesting, again, I always say mining's about timing, right? Some people get lucky with that. Not deservedly, but they get lucky with that. And that's fine. It's fine.
Yeah.
But it feels like with uranium, the timing is quite good, but also the Africa component is quite good because we've seen, Paddy Downey was here yesterday with his Orezone project. All of his money came out of Africa. So it is possible to get these projects financed, African projects financed by African banks in consortiums and so forth. But you've also got that competitive tension of what you just said about the US, one, investing into Niger, but two, looking at Africa as a whole and trying to secure a whole bunch of critical minerals as well. It bodes well for getting the kind of the cost of the capital down, which is a big driver on your economics, right?
Well, can you have that conversation with a lender for me?
No,
but you're absolutely right. You're absolutely right. And so we have been talking to export credit agencies, DFIs, commercial lending, all in that package.
Yeah.
And there is definitely a very large component of that it is export credit support, government supported backing that comes into that, because they want, from geopolitical reasons, they want to support countries like Niger, etc. They appreciate that, mining in there supports the economics, social positioning as well, all important, but also we need the metals. So, that's very important coming through.
It is, and I was one of those guys that you'd be coming to and asking for money, but I would want to be looking at all these other factors that you've kind of mentioned to me. But political stability seems to be a tick box at the moment. I even think the religious component is a tick box at the moment. It kind of feels like it's safer. Do you know what I mean? Because I think that there have been various conversations around that whole West Africa thing, but pre-COVID. I'm not saying it's gone away, but it feels a better investment environment for me with my banking hat on now, because of I keep using the word reality, but that's the truth at the moment, is that there's a kind of a more primal and basic need. I need energy security, please. And governments will do things and make things happen because of that.
But I think particularly with Niger, if you look where the presidents, this president and the last president are positioning themselves, Issoufou, his last role before he retired and stood down was the chairman for the Security Council, and took a very strong Western-looking view in that approach. Well, you've seen the issues in Mali and Burkina Faso. Niger has said, look, guys, we have to keep an outward-looking view. And so those French military forces have been kind of come into Niger and become part of that. And it's like, no, we have to create a stable foothold in West Africa. We are that stable foothold. And we will work with international governments to ensure stability is formed here. And we are already stable. So let's just use this as the foothold. I think that's important.
I think it's very important. I also had a great conversation earlier in the week with, off camera, obviously, where someone who knows who's in country is talking about what's happening in Mali, for instance, where the French actually withdrawing from Mali. Guess who stepped in to help their Chinese friends? Russian forces. Well, I won't say forces. Russian security.
Yeah, well, we even call them that.
The muscle. The muscle right there. But and that for the Americans must be sort of like, well, hang on a sec here, and that's just next door. Come on. So I think that in terms of that's why there's kind of reinvestment into and beefing up of their position in that part of Northern Africa is critical for them, but also good for companies like yourself.
Yes.
Yes. That's good. So in danger of wandering off into into an area we don't want to. So with the numbers game, you kind of gave us a clue that your strategy, you're always kind of thinking, well, how do I kind of manage this through? So Falea off, there's some value to it, but you park that up for now. You are going to have conversations this year, or you are going to need to raise capital, advance these projects through. So what does timing look like? What are the things we should be looking at for 2023, which will create the value? You said you're undervalued. What should people be looking at?
Yeah, if you look, let's start with Madaouela. The next big step for me is to get those letters of interest off the lenders. That clearly gives me comfort as well that we're progressing. Once I've gained enough comfort this thing is going where I need it to go, then I will sign up the PCMs because they need like 7 months before we go on ground and before we get the money. So they need that time to get going. And also I don't want to be committing capital unless I know I've got a good chance it's coming on. So target would be to have pulled all the debt together beginning of the fourth quarter. If we can get everybody to behave themselves and the offtakes can come with, and at that point, and this is a conversation I've had with the offtakes as well. Look, anything we're negotiating has to have the CP of financing. We all understood that the commitments are there. So let's call it the end of this year, early next year. All the money's in, including the equity. That's when we start construction, and then we have 2 years to build, and we will then be producing uranium.
So in terms of the FID process, you're saying that we're obviously the money is the key defining component, releases the ability to press the green button.
Yes.
How much work on the FID element is yet to happen?
Look, the feasibility study that we did was incredibly detailed, and I don't need to do a lot more beyond what I've already got sitting there. We pushed a lot of all the PFDs, PNIDs, all of that was done as part of that process. I think what we're going to see is, as part of the ongoing from us internally is more optimization. What can I now do? Now I've got a benchmark number to improve on that, and how can I reduce costs to go forward?
Well, you're constantly reevaluating.
But that's a process. The other thing we're doing in the background, just as just a sidestep slightly before we come on to Mutanga, is just getting the team ready as well. So I've been doing a lot of work last year on. We'll use ESG as the banner, and I want people to start realizing that ESG isn't just about solar farms. That's the least of the issues. It's about putting in place the processes that become self-checking. And the term that's used is plan, do, check, act. So that's the way you design everything. So you have a health and safety policy. You have the procedures, you have the manuals, but they're done in a way that you regularly review them. You regularly review your risks. Because you can't plan for today what's going to be done in 2 years' time. I mean, you don't want a welding strategy when you really aren't there. So you let the thing, you build the culture to let it build itself to that point by itself. So that's a big part of what you're trying to do.
Refreshingly boring, which is what I love to invest into.
Well, it is refreshingly boring, but if you don't do it, you'll trip up.
Exactly.
Yes.
That's why I like it.
But it's not incredibly boring. It's incredibly intense amount of work from our point of view. So that's very much what we're doing as well. It's not just about running around trying to find the money. It's making sure that the company itself is a fit form to take that money on and do what needs to be done with it. So when it arrives. So that's another important facet of what we're doing. On Mutanga, as I said, we finished the drilling on that one. So that's now all the way. We took out about 4 or 5 tons of material, which has gone to the Copperbelt University to do their met test work, really to verify what was done before. because that one had actually been to a PFS before. So we just want to verify that that works. And we're going to do a resource update. Should hopefully get that out by the end of this quarter if I get everybody lined up, to just incorporate that extra infill drilling that was done on Dibwe East, which takes it all to indicated. And then we have to just go through that FS process. And, you know, those are exceedingly boring times for investors to look at, but they're
it's great. People kind of casually use the word de-risking, and I think it kind of falls in deaf ears sometimes, because you move from the what-if conversation of an explorer and saying, well, we hope to make a discovery, or we hope to get higher grades, or we hope to put this model together which allows us to understand what the ore body looks like, through to a point where you go, well, there's a known path to delivery. We've done it before. We'll do it again.
Yeah.
And we totally understand. Well, we understand the economics today, and we'll keep reevaluating that for efficiencies to get there in a market which is super, super exciting. And quite frankly, for everyone, because of last year, a lower base. So the actual de-risk component may see as much leverage as perhaps the exploration stage. That's the kind of environment we're in.
Oh, absolutely. And at least now, when you're having these conversations, I'm not doing it with a $30 uranium behind me. Yeah. It's like, oh, well, I do an FS. Well, you're nowhere near. And people go, oh, and this is the other issue people have got to start remembering. People keep saying, yeah, but you need this, but it's a $50 uranium price.
Right.
And then you go, but guys, contracts were being cut at 58 at the end of last year.
Yeah.
UXC's forward curve for 2025, 26, when we're going into production, is 69.
Well, let's have the lights out discussion, okay? Because there's a big audience here who'll be used to investing in gold, silver, other commodities, and they'd be quite right in thinking if you had a gold CEO talking to me going, don't worry, our project's great at $3,000.
Yeah,
you're going, you're nuts.
Yes.
Okay, but for the uranium CEOs, there's a different kind of quantum and a reality here. Is the sense that there's the lights out conversation, which is, if we don't do this and price doesn't move, no one's going to produce the stuff that's going to keep the lights on.
Correct.
So different debate. Sorry, I paraphrased it.
No. You're absolutely right. You know, and you know, we've been putting in RFPs. The one bit of feedback that comes for us is, you haven't quite won yet, guys, but trust me, the bids are coming in higher and higher all the time.
Yeah.
They're almost on you. And I think that's the other issue. The gap is so big, and we're going back to projects that are permitted and those that we're all waiting for.
Yeah.
The gap between supply and demand is so big, there's a lot of space for us guys who are ready now to get in there and take that gap. Timing is absolutely everything. You know, better to be early than late in this business. And so, absolutely. And so we're already seeing that coming through. And I think the other thing that is continual in this market is you've seen a number of things happening. You've seen utilities fixated on where EUP is coming from. They really didn't care where that U38 was coming from for a long time. You have seen a fear from them, which is they do need to pin it down, which is why you've seen a large pickup in off-market, most of that being done by Cameco. And they only have a finite of material they can sell. Most of the utilities are still coming out. We received an RFP yesterday from a utility who needs material 2025, 2026, 2027, and you know, a substantial amount. So you're just not seeing that marking into the spot market yet, but it will. But as you see that, all right, we're starting to stop worrying about you through it. I'm now going to get yellow cake. Where's that going to come from? Yeah. So, and as I say, we're already seeing those term contracts getting higher and higher and higher. So we, you know, certainly the utilities are saying to us, just, you know, don't worry, guys. You know, keep talking to us. We know what price you need. When we're ready, we will do the deal.
Nice.
It's great.
Thanks for coming in. I appreciate that. I know you're busy as heck over there, and there's a lot of people clamoring to speak to the uranium guys, which is good news.
Yes.
I mean, fantastic news. And 2023 should be exciting. That price tension is palpable now. Like we've been at this for 4 years, and people saying, "This is the year. This is the year," and we sort of sit back with a wry smile and go, "Okay."
Well, I think that's when you talk about strategies. You know, I've been talking for a while, and you know, we've always been just slowly moving forward. You know, we're not rushing and we're not parking back. It's always been a case of go the next step, where we think the market is, and we've tried to time ourselves for when the market's ready. And I think we may have got it right.
May have got it right. Well, great news for you and everyone.
Yeah.
So appreciate you coming in today.
Pleasure, always.